Today is a different video. I'm going to be reacting to some Forex trading TikTok videos. And for this, I've just searched Forex trading. The reason I'm doing this video is not to have a laugh at some videos, but to basically show you, if you search Forex trading, what kind of videos do you get? And obviously a lot of people will be searching on different social media platforms. And as it is a popular platform nowadays, we're going to be starting with TikTok in this video. So I'm not expecting anything super educational, but again, the average person, perhaps they see a trader, they search it, and this is exactly what they're going to see. So we're going to look and see if there's any good advice or maybe bad advice that I can say to you not to do, but it will be an interesting video, hopefully. So we're going to put on the headphones and we're going to start watching the videos.
Where is your sword?
Don't need it.
So we're not starting with a great video here, to be honest. This is basically someone promoting not using a stop loss. And they're saying they don't need a stop loss, right? So the main downside with this is, let's say they entered at this point, on this candle. What's to say that there's a random tweet from Trump or an earthquake or anything can happen and then your account is liquidated? Anything can happen. But you also need to consider the fact that that's your money on the line. I don't really see any downsides to having a stop loss. Some people say they get manipulated and the banks are targeting their stop losses. We know this is a complete load of rubbish, and who cares about your small stop loss in the grand schemes of the whole market? Just put a stop loss on. If you don't know where to put a stop loss, you haven't collected enough data and you don't have a strategy. Without a stop loss, you can't risk manage. Without a stop loss, you can't ever know how much you're going to lose on a set trade. Let's say your Wi-Fi goes down or your phone starts freezing. Anything can happen and then you can't close your trade. It's always better to have a stop loss in place before you enter the trade, so you know exactly when you're going to lose and how much you are going to lose. And you can't really calculate your risk without having a stop loss in the first place.
Would you buy or sell here?
Well, I'm guessing it's going to say buy because it's an uptrend, but again, we'll see.
There is no chance that the market will go down because of these candlesticks. This pattern is...
See, this is a common misconception with people that are learning to trade. They'll learn candlestick patterns and then they think that is the only outcome possible when these candlesticks actually present themselves in the market. I'll put a video on the screen here. I used to draw these candlesticks. I had a notepad in 2019 and I would try and draw them all and try and identify them in the markets, thinking that when this happens, it's a sign the market's going to go up. But when people say there's no chance that this can go down because of these candlesticks, it is just showing that they don't understand trading. There's not a single strategy, a single pattern, a single market signal that it gives you that is going to have a 100% win rate. So you can't possibly say this has no chance of going down. There is obviously a chance that this can go down. If every time price had 3 candles like that, it went up, then we'd all be billionaires because we buy every single time we saw this. And if I had something that had a 100% win rate, I wouldn't be making YouTube videos right now. I'd be chilling on a yacht somewhere, because if it truly had a 100% win rate, you could risk 100% of your account on every single trade and double your account on every single trade. But as we know, that is not the case. So this person is actually making TikTok videos to try and claim that it has a 100% win rate.
It's called the Rising 3 Methods. It's a strong bullish continuation signal. It consists of 5 candlesticks, a long bullish candlestick, followed by 3 smaller bearish candlesticks contained within the range of the first, and finally another long bullish candlestick that closes higher than the first.
Again, the issue with speaking like this in your trading, you can't just say a long candle, a long bullish candle, or a big candle. You have to be specific, because there's going to be conditions where price is very volatile, and there's going to be conditions where price is not very volatile. Perhaps we are consolidating. So this will always affect how each trade looks. So a big candle when it's a volatile market could be 30, 40, 50 pips. But then a big candle when price is consolidating could be 4 or 5 pips in relation to the current volatility. So saying a big candle, you kind of have to be more specific with your strategy, because I don't think it is the best way to actually look at. You want to make it as mechanical as possible. And if you're trying to teach someone and you had a list of your strategy checkpoints, so I need this breaker structure, or I need these 3 candles, then I need 1 big candle, or I need 3 small candles and 1 big candle, it doesn't really make sense. They're going to be like, oh, what is a small candle? You know, is it a pip? Is it a percentage of the daily volume? Like, what is a small candle and what is a big candle? Making your strategy subjective is a easy way for you to be confused in the markets, and you can make mistakes. You can take setups that don't actually fit your plan because it is not as mechanical as possible.
Yo, I hit rock bottom, more money, more problems, talking girls, I got options, but now.
See, again, this is promoting the whole go all in with trading, and I don't think that is the best way to look at your trading. If you only have £1,000 to your name, then you probably shouldn't be putting that all into trading. You should be focused on getting a job, actually building some sort of emergency fund, and then you can start building capital that you can put into trading. But you should always have income that is subsidizing potential trading losses. So if you are losing money in trading, which you are likely to be doing as a beginner trader, then you need an income. If this is a part-time job, a full-time job, perhaps you have another business or something on the side, you can do this. It funds your expenses. It makes it stress-free for your trading. If you only have £1,000 and you want to become a trader, you're not going to make it. The chances of you turning that £1,000 into a profitable trading career are very, very slim. And there are only a few traders who have actually managed to do that. I'm not saying it's impossible, but it's very, very unlikely. And if you had a job that was giving you income, allowing you to build savings, whilst also paying for all your expenses, and then focusing on trading alongside that, this will allow you to invest in your trading whilst not having the pressure of making money every single month, not knowing whether you're going to be able to pay your expenses, to be able to buy food or not at the end of that month. And by putting everything into the markets as a beginner trader, you're definitely not setting yourself up for success. See, this is a relatable video, I guess, for most traders. And it just shows how if your stop loss is there, just trust the trade. Anything can happen if the trade is still valid. I see people that would react in this situation if we play it again. As you see prices going down, they will be like, oh, I don't want to lose if it's going to keep dropping like this. But if the trade is still valid, obviously this wouldn't still be valid for me because it's broken the lows. So I would have been out around this point here when this candle closed, in fact. But again, it doesn't matter, because if the trade's valid, you hold it. If it's not valid, you don't hold it. And that is just how it is in trading. It will be painful sometimes. It will be quite annoying when you are having to hold trades that don't look great. But again, that is the life of a trader, and it pays well if you are successful.
So when right go wrong, just say a little prayer, get your money, man, life goes on.
Hopeful, yes I am hopeful for today. Take this music and use it, let it take you away and be hopeful.
See, this video is probably relatable to a lot of people watching the video that I'm making here. And the reason being, you don't have defined trading hours. I know going onto the charts, I trade from 8 AM to 12 PM. If I don't have a trade in that window, I'm not on the charts. But I know that in those hours, I could potentially have a setup. So I'm not going to close the charts and then be undisciplined and be back on the charts. No, I know that in that window, I can have setups. So I know it's okay to take setups in that window if there are trades that fit the plan 100%. That also means that you get your trading done early on in the day, which I think will help a lot of people. I don't know about this individual in the video, but many people in the industry, especially beginners, they go into their trading trying to trade every single session. So they'll try and trade London session when they wake up, they'll try and trade New York session, and they'll try and maybe stay up overnight, trade Tokyo session. And it's not the best way to go about your trading. You can never truly relax and switch off from the markets if you're trying to trade every session. The main benefit to only trading one session or one little bit of a session, which is what I do, a 4-hour window, it means that I wake up, I trade at 8 AM, I see if there's any setups. If there's not any setups at 12, close the charts. And then I don't even have to think about trading. I can completely disregard what's happened that morning. If I won, it doesn't matter. If I lost, it doesn't matter, because I'm not going to let it affect the rest of my day. But if I could potentially have a setup later in that day, then it might affect the way I'll think about entering that trade. If I could potentially lose more money, then it's going to be difficult for an average trader to enter a trade if they've already lost money in the morning. They then have to think about that loss all day, wondering that, oh, is there going to be another trade that I could lose today? Again, it's not the best way to have your trading. This is true. I haven't agreed with many videos today, but this is true. Trading, you can get rich quick, but it's not going to be quick to get to that process, if that makes sense. So it will take you a while to get to the stage where you can make money quickly. I'm going to put it into perspective with my journey. So the first year or so, I basically just lost money, and I was young. I was trading quite recklessly, and there wasn't really a chance I was ever going to make money with the way that I was trading. But then I sorted this out, and by the time I got to around 18 years old, I was already 2 years into my trading journey. And at this point, I could obviously start trading in prop firms. And once you get the ability to access large capital, and you have the skill set to pass prop firm challenges, this is when I made proper money. And after that, within 4 years, 5 years of starting trading, I went from trading with £2-3 wins back in 2020 or 2021. And then in 2022, 2023, I had multiple 5-figure days. And notably, my biggest day in the markets, I think 4 hours of trading or 4 hours of total trade time made over $54,000. So all that time you put in, you're not being rewarded until you are profitable. And then you have to keep working to remain profitable, adapt to the markets, and then scale. But then once you have scaled, then you can make unbelievably life-changing amounts of money. It's not like winning the lottery where you literally can get rich quick overnight, but you can take 3 years to get to the point where then you can get rich quick overnight. But I'm not saying that trading is a get rich quick scheme, and you shouldn't get into trading if that is your goal, but it is definitely a possibility for you to make large amounts of money. So those are the videos that I have reacted to today. If you have any other videos that you want to see me react to, be sure to let me know, and I'll catch you guys in the next video.